Welcome to today's podcast. This is Tom Savantry from Cranial Pride, and thanks for joining me as always. And I'm really hoping you're getting some valuable education out of this with some guests. And today I'm going to be solo, and something that's come up more recently, and I wanted to share, kind of relates to things that are expensive or cheap, right? We hear this all the time, especially in the world we live in now, where inflation, you can feel it basically everywhere you turn, from education to getting a Happy Meal at McDonald's to insurance, right? The cost of things just seem so high. And certainly we can thank partly our friends at the Fed and our U.S. government, and a lot of what they've done over the years, and it's created an environment where things are just more expensive. And unfortunately, I think they're going to be here for a little while, as far as I can tell. And I know this recently dropped rates too, so we'll see how this unfolds. But I hear it enough, and I hear it from my son more recently, even when he went to go get some food with some friends, and he said, "Man, everything's just so expensive," and you feel it, and and I can imagine it's palpable. And my wife sometimes always says, "That's expensive," and I kind of always preface it with a couple questions, like, well, compared to what, and over what time frame. And unfortunately, we sometimes can get this wrong because we're very short-term minded in a lot of ways, and I'm guilty of it too. But when you kind of take the bigger picture of it all, is it really expensive? I think of these things just outside of just the typical financial world, but there's a lot of things, and I've grown over my time in my thinking around this too. Is I used to buy cheap clothes, right? Clothes from maybe like an Old Navy or somewhere where they were cheap, feeling very cheap to buy and easily accessible, and feeling good about it. But then in the next season or two, I'm ready to throw those things out, right? They're either misshapen or loose style, or they're just not good quality. And so, yeah, it's cheap to begin with, but over the long run, if you think about it, I'm constantly buying more and more of it over time. It gets expensive, right? If you really tally it up over time, when you think about cars, it works the same way. Like, you're buying a cheap car, you're likely going to probably deal with a lot of maintenance over time, and costs that weren't sort of factored in when you purchased the car, but over time can be hugely expensive. And something that I've certainly gotten more tuned to is things around our health, right? We can easily sort of do some things that are maybe not in our benefit, not working out, not investing in our health. And because there's nothing near term that's really jumping out at us, but over time, if you're not taking care of yourself, you're gaining weight, all those sorts of things, not working out, it's easier to do now, and maybe cheaper to do, but over the long run can be hugely expensive. In either you don't live long as you want to, or you run into huge health costs along the way down the road that hopefully were preventable. And so, it really takes some energy to think about, are the costs that you're incurring today, are they essentially more investments in sort of your lifestyle and hopefully reducing costs down the road? And so today I want to cover just some basic sort of areas around personal finances to help you think through, this sort of equation when you're considering whether it's cheap or expensive or not, and how to think about it short and long term. Because really at the heart of it, I think it's, we have a lot of typical advice that is really sided towards trying to be as cheap as possible and cost cutting. And I'm not saying there's anything wrong with it, but I just want you to understand the kind of longer term perspective, what that could look like. And really, when we're planning and doing anything, especially around our finances, it's really with the long term in mind, right? Because we have to think about where we want to get to, what our goals in the future, what income we want to have, like lifestyle, and that's all really factored in, potentially decades down the road. And so we can get so wrapped up in the near term sort of noise and information, and causes maybe to do things that potentially will be detrimental down the road. So the one area in a more macro level, one of the areas I think can get lost here is around financial planning and sort of more comprehensive planning, right? Because in the world of finance, I think a lot of it's migrated into investment management, right? You hear this were, they're all over the place, a lot of advisors, and it's primarily focused on trying to sell something, whether it's a portfolio or insurance. And it's not really planning, really. It's really purchasing products. And there's a lot of salespeople around who are doing that toward work, and there's benefit to it. But I think for a lot of folks who have now adopted a model where they're trying to do it themselves and they're trying to maybe manage multiple types of investors, from investments to insurance to taxes, whatever, legal, and not getting really comprehensive financial planning because they don't want to pay for it, right? It can, in their mind, be very expensive. But when you kind of peel back the onion and look at this holistically, right, there could be a lot of things that may be uncoordinated across someone's financial life that add a lot of risk, right? Because these advisors, because they're not really kind of working together, it's hard to coordinate the assets together so they're working in the most efficient manner. And people will miss out on a whole host of things because they're trying to sort of survey the land. They're not involved with their finances all the time. And so it may be difficult to sort of get the latest and greatest information. And I think about it from a doctor lens, and keeping up with kind of the current sort of options out there and philosophies and strategies. If you don't have that planning and contact with advisors that you can trust, you're probably going to stay behind, and the information you're using is probably outdated or maybe inefficient. And so there's a lot of, whether it relates to taxes, to investment options that may not be in your sort of purview to assess. Like, it just, these are opportunities that get missed, and in the long run I think it can be very expensive because you're embedded into investments that maybe you don't know about. And there could be a lot more opportunities out there if you're sort of connected with the right network of trusted advisors in all these different areas. And we'll go through a little bit more into detail with some of these things as we move forward. The one big area, though, as it relates to this, is certainly one is the coordination of all your assets and protections, in a more comprehensive plan. But also thinking about this from a long-term perspective, where we want to get to. There's so much emphasis on building a net worth, right? That's the target. And you see a lot of these sort of experts are saying, and using math, say you put your money here and the market grows X. And if you keep on doing that with absolutely no disruption, no downside risk, this is what you're going to end up with, a number. And it sounds great, right? Whatever, $1 million, even though we know $1 million doesn't feel like that anymore. But it's math, and there's missing a lot of things that go along with it. Could go wrong, or making pretty broad assumptions on average rates of return, which is not real. We know that can rear its ugly head on us in a very short window of time. But a lot of people are not thinking about the end, on what that retirement, which I'm not personally a big fan of the word retirement, but I know there's people who are shooting to get to retirement, and then their lifestyle changes. Now they have more free time. They have now access to do things that they maybe weren't able to do in their working years. And now you have to sort of plan for that, right? And it's about now being able to create the maximum amount of income, not so much what your net worth is. You could potentially, if you coordinate these things right, you can actually have a lower net worth with way more income. But you got to understand how to plan for that, and what pieces you want to have in your financial life that will help facilitate that. And so these are the types of things that there is no one size fits all answer to any of these things. And that's why it's, in my mind, I always joke, it's personal, right? There's a lot of ways to go about it based on kind of people's experiences or the willingness to take on risk or not. But you need a plan to kind of think with the end in mind on how you're going to maximize your life when you maybe get to that stage of retirement, and how those assets, whether they be protections around insurance or investments or tax strategy, how do those play in there? And unfortunately, what we're seeing in a lot of folks that are done some really good work, they're walking into a world where, one, the mantra of, hey, I'm going to have less income in retirement than my working years is the goal, which to me is insane. I want more money in retirement, but the way you win and pay, quote unquote, less taxes is you have less income in retirement, which is not attractive. Why would anyone want that? So these are the types of things I really would urge you to investigate and explore a little further, and maybe check your plan, even if it's a one-time review of your plan that you can then take it from there and kind of go forward and get occasional check-in. There are folks that do that kind of work just to give you a second sort of look at what you're doing and are you optimizing all the areas of your financial life. So that's all I want to kind of say about that in the general planning. And I think it's important to do, and even if you are a do-it-yourselfer, which is fine, is getting some expert advice from different areas around legal, investments, insurance to really ensure that what you're doing is optimal and you kind of see the bigger picture on how these things work together. And then you can sort of be more informed and educated and confident in what you're doing is best for you and your family. So the one specific area that I know comes up often, and there's a lot of back and forth around this, topic is around insurance, and I'll break it in a couple of different areas. One, obviously, when we're thinking about insurances, and unfortunately, at the time of this recording, there was such devastation in the areas of Florida, and people's homes just destroyed, and obviously many people died. Just awful situation. And that in that area of the country now in Florida, it's not a lot of people are going, a lot of insurance companies are even going to play there anymore. And even if you're getting insurance, it's going to be hugely expensive. But imagine in a world where you don't have insurance, right, to protect your assets like your home or auto and certain your life. The amount of devastation that can cause to a family is incalculable. So to me, the insurance playing the role of risk mitigation to basically control what you can control, because a lot of these things we cannot control. To get that insurance in place in some shape or form, to me, is important. And it's also, in that world of people are always trying to just get the cheapest insurance without really understanding the types of insurance they have. So, buying it cheap is okay. Like you're trying to negotiate and try to find the best insurance, best rate for it. But you also got to know what you're protecting and is it adequate for you and what you want for your family if those things happen, like your house, basically burns down or is destroyed, right? What would you want? Would you want the full house replaced? Of course you would. But so you have to kind of understand, are you adequately protected in a way that's going to, serve you and protect you in a way you want? And a lot of people are just trying to price it out for costs, like what's my annual premium? But the value of the insurance is what it's protecting and what it will do for you in that case. And so those are things I really encourage you to, get with a good property and casualty advisor to help you think through that. What's the value of the insurance you're getting? Is it protecting the things at their full value so that if it does happen, you're going to get what you want out of it instead of just trying to shop around and go with the cheapest as possible. I think it's a recipe for disaster and put yourself at significant risk of assets basically not being sort of returned to you if things happen poorly. The other side, which anyone knows where I am, I'm a big believer in life insurance because it is our in my mind, our number one asset in our lifetime, right? It's not a house, it's not a car, right? I wouldn't even say it's your business. It's your livelihood and your brain and your ability to operate on this earth. And so protecting that to the max to me is important, at least for me and my family. But, for folks who are thinking about life insurance, there's so many sort of people butting heads around this sort of philosophy. And, for a lot of folks, the way to go is, the buy term and invest a difference approach, where you're buying as cheap as possible term insurance for your working years to protect your income and maybe take on some debt. But once you get of the age where you build enough assets, hopefully, and your kids are older and you don't have as much to protect, you can get rid of it because it's so darn expensive, right? So that's the model where it's cheap. And then when you probably are likely, you're certain to die after that stage, it's too expensive to own it. So they dump it and they quote unquote self-insure, which really isn't a real thing. But they like to tout it this way as self-insurance, even though that means that, assets you're using as self-insurance, you really shouldn't be touching because you're using for insurance, right? So it's kind of really not. But, this is the approach that a lot of people have been taught and marketed to, right? So that's cheap to begin with and very expensive on the end and can be a tremendous asset if people understood it. Flip it on the other side is whole life insurance. And there's different varieties of permanent insurance. We're certainly partial to whole life, but there's things like universal life, indexed and variable. But, to be there for your entire life. And so this is usually the discussion. Well, why would you ever buy a permanent policy that's, say, 10 times more expensive in term for the same cost, like for the same coverage? Well, it's not the same asset, right? Because you're not purchasing a term insurance just provides a death benefit. Whole life comes with a whole host of other sort of benefits to it, so that you have to pay for that, right? And you're paying a lot more for that policy up front. So they're overcharging you. It's just by design up front. And then as the years wear on, it gets cheaper. So it's almost like the flip flop of what a term insurance policy is: more expensive up front. As your years go longer into the policy, that asset becomes much cheaper. Now I have policies that are 20 plus years old. I put $1 of premium in, the cash in those policies go up by 2.5, 3 times. So over time, that gets cheaper. So it's really the lens you think about. And, we won't have time to go through it into here, but, having that asset in the later stages in life can actually maximize the use of your other investments and other assets. But it's just one of those things that you got to have that end in mind, in sight, understand what you want it to look like and what are the detriments of kind of the typical path of where you're going with, right? So I see this often, and it's something just to consider. And frankly, I have both. It's not either or, which is a typical fight. To me, it's term insurance and permanent insurance. They just serve different roles, and they can be complementary over time because you can convert over to a permanent policy if needed. So it's something to think through and get with the right advisor to help you think through what is right and how it actually is a great diversifier in your portfolio to enhance what you're doing on the investment side, because it's really not investment. It's your kind of savings and protection tool. So one of the third area that I like to cover around sort of this sort of philosophy around expensive or cheap is, and it hits on a kind of that comprehensive planning, but it's spending time with the right advisor to do some proactive tax planning. Taxes, you hear that sort of Ben Franklin phrase. There's only two things that are certain in life, and that's death and taxes. And, given where we are with our national debt and all the social programs, I mean, the concept is that, the government's going to need more money. And the only way they get money today is through taxes. And unfortunately, you have this sort of very interesting divide in this country where, the people at the very lower end of income levels don't pay that much tax. And the people who are very wealthy find ways to mitigate taxes. So then you have this big bolus of folks in the middle that are making great incomes, but aren't doing as much in terms of tax planning, other than maybe deferring some taxes into qualified plans, which is, the mantra. And then, but they're paying a significant portion of their taxes in federal, state, you name it, taxes that could equate to, maybe, depending on which state you're in, could be upwards of 50%. And we're actually, believe it or not, in some of the lowest tax rates in our history in our country. That was supposed to be part of a tax system that was temporary. Well, here we are 100 plus years later, and it's not temporary, right? Unfortunately, taxes will be here. So doing some proactive tax planning will be key, because when we pay taxes, and whatever that amount is for you in your situation, that is, yeah, it feels bad initially, right? Already, right? We have to pay that, and government smart. They've figured out a way to make it a little less painful, because they're extracting it before we get it in our bank account. They take it before we get it, right? So because they know we're probably not going to save as much on the side to pay them, so they take it first, and they kind of understand the game here. So when they take it, right, that eventually, as we pay it and we do our returns, is a loss. In my mind, it's a loss. And that loss is not just that money, but what that money could earn for, decades in the future. So that's a massive opportunity cost that never gets really truly calculated. But a dollar lost here, or even if you spend money, right, that money actually could have grown to whatever in the future. And that is really an opportunity cost that really can erode our wealth over time. And it's something that gets kind of missed. So this is where it's so key as you're, going through it, because again, depending if you're in California, half your money could be going to taxes in some shape or form, and state and federal. So you're working half your year to just pay the government. And to me, that's just insane. So this is where you get with right advisors to help you think about and tax plan according to what the government is incenting us to do. It isn't evading taxes. Listen, you and I don't want to go to jail, right? So it's not a evasion tactic. Is there are legal ways within the tax code to do what the government actually wants us to do and get tax benefits from it. And so you just have to follow the laws and get with the right advisors who are doing it right. Unfortunately, for a lot of CPAs and enrolled agents, and they do a good job, they're just so inundated with the tax code and keeping up with that, and the cycle of tax return season, which has now kind of gone to the full year. They don't have time to really understand and learn about all the different strategies of how to mitigate taxes. They just don't have the time, right? They clearly have the intelligence to do it. They just don't have the time given the nature of the beast now with taxes. And so getting with the right tax advisors and others who are maybe looking at it from that lens can give you some options to how you can mitigate taxes now and in the future. Because the deferral model is okay, but eventually down the road, you're going to have to pay that piper. And it could be a time when, your income is higher, tax rates could change, right? And some of it you can't even pass on to the next generation. They're going to have to pay it, right? You can't do this stepped up basis with some assets. So you just have to kind of spend some time with the right advisors to understand what are some legal ways. And, there's a lot of folks that we run across where they're getting to their retirement years and they haven't tax planned. So the bulk of their assets are sitting in qualified plans that eventually they're going to have to take because the government wants their money. And we're not even sure what tax rates will be, but they need to live. And back to the original point, this is the end in mind. Like, what income do you want the most or the least? Because the least will, pay fewer taxes, but it's maybe not going to allow you to live the life you really want, right? And now the money is sort of going unspent, right, or not used as well as you'd like. And so these are the types of things to consider as you're kind of building up your wealth and accumulating. But how is that going to turn into income down the road? And taxes are going to be such a huge component of it. And people don't realize it too, like around the taxes, especially later in life. And that it could impact, your Social Security payments and what it costs for Medicare. It kind of has a compounding effect people are unfortunately not always aware of. And so getting with the right advisors to help you think through that is so key. So the other area, which I know is just sometimes, I think for most of the time, kind of put on the back burner, even for people who have significant wealth and people who don't. And that is estate planning. And certainly I recognize for people who are younger and building wealth, and they said, well, I don't have anything to pass anyway, so what's the point? And I agree to some degree. There's nothing advanced you really need to do, but there's a lot of things you can do very basic because, legal documents, it isn't just when you die. It's like powers of attorney, healthcare proxies to act on your behalf. If you can't act coherently, speak for yourself, who are those other people who are going to work on your behalf to help support? My son recently went to start his first year at college, and we got him set up with some basic powers of attorney and healthcare proxies because he's an adult, right? If something unfortunate were to happen to him, there's nothing legally binding that allows us as his parents to act on his behalf. And so we put those legal sort of documents in place so there's no dispute to it, regardless of what happens, and we can act in his best interest, and we're already legally created it on the front end. So it's important, even just to get the basics. You may not even need to get a living trust or anything, but at least a will and some of these sort of other ancillary sort of legal documents to give you others protective rights. Now, if you're growing, and certainly if you have kids and married, and young kids, getting those sort of documents in place are huge, right? To say who would take care of your kids if you weren't longer here, and who would help manage any monies that are left over for them because they can't touch those dollars themselves until they become adults, right? Who's going to help manage that in the awful scenario that you're no longer here? So these are things that take some costs and time and energy to put in place, but on the back end could be very expensive and cause turmoil because you don't have everything set up in the way that you'd want to for your kids. Now, for folks who have significant wealth too, I mean, this could potentially be a big deal because as you're building your wealth, right, you may have accumulated different types of assets, whether it be homes, investments, right, rental properties, you name it, businesses, right? These are things that, are assets. And one is to consider getting them into a living trust as the owners of those assets to facilitate the transfer for probate, right? And anyone's heard about probate, and they're going to vary by state, right, in terms of laws and costs associated with them. But that could be a potentially long process to unwind and transfer assets that were not already identified into a living trust that could easily pass. So if you had a living trust, by and large, most of them can pass very quickly. It's an easy transfer, and it reduces the cost of any legal costs for probate, right? It's not even just delay, but cost of lawyers in this. It isn't free. So there's cost at the end of it, very expensive, and it could delay the transfer of assets to spouses or children as needed down the road. So it can be very expensive only and just super painful at a time that most people are just grieving and they don't want to deal with all of these complications, but it kind of adds fuel to that. And so this is what we can do for our families, is to plan ahead, spend some time and energy and money to put these things in place. So in the unfortunate event these things happen, it's taken care of and transitioned over to the next generation or spouse without any pain or cost or least amount of friction. And sometimes I just feel like it's doing something for them, because you thought of them and you cared and loved them, right? This is something you can do for them before it's ever needed, and then make it simple and easier for them at a time that is just potentially a bad time in general. So it's just something to think about. And certainly for those who are of significant wealth, is to plan ahead, thinking about wealth transfer and potential estate taxes that, we know those can fluctuate up and down yearly. And it actually by 2026 is supposed to revert back down. Who knows? But, given the government where they are with taxes and debt, there's probably a likelihood they're going to come after people with some wealth. And one of the ways to do it is an estate tax. And so that, I assume, is going to be here for a while. It could, reduced in terms of threshold. So people could get ensnared in this, right? So there's definitely a possibility of that. So something to consider: how do I mitigate taxes down the road, right? Do some work now to get those out of your estate. And there's legal ways to do it through trusts and other sorts of means, but it does take some energy and some money to do it and planning to get ahead of it. The last thing I'll cover here is something that I think is probably pretty rudimentary, but something I wanted to touch on is debt. And debt, to me, there's a difference between debt and leverage. And debt, obviously using debt strategically, I think is important to help build wealth in our businesses, our investments, in our life. Helps us to sort of maximize what we do, but we have to do it with care, right? Smart use of debt and disciplined use of debt. And we talk about a lot of this as it surrounds, leveraging the infinite banking concept and taking over that banking function. But regardless if you're, borrowing from a bank or other entities, right, same philosophies apply. You have to be honest and be disciplined with it, right? And you can't just pay the very bare minimum and let these things compound over time, because especially when you're using expensive debt like credit card debt, I mean, those things will eat you alive with costs over time and really make it difficult to build wealth and save. And so those are areas that just have to be a little bit more mindful of and disciplined to use and use strategically. Now, when we use debt, obviously that can amplify returns, but amplify losses too. So if you're using for investments and things, you really have to just get knowledgeable on what you're investing in and try to find ways to mitigate sort of the downside risk. I think as I've grown in my sort of journey with finances, is the smarter investors that I've come around and learned from, they really think about risk mitigation, how to protect the downside and mitigate those costs, and try to get asymmetric returns, right, in the things that they're putting money in, because they understand them better, they understand the economics, and they understand the people involved, right? That gives them an edge, right, versus just playing the market. And so trying to make sure that as you're factoring in anywhere you're sort of investing, right, are there ways to mitigate risk by diversifying how you're investing or getting collateral for your investments and those sorts of things. And obviously there is always a chance we're going to do some speculative investments that may have sizable returns, and some will lose, but maybe that's not a good spot to put leverage, right? Just some food for thought. So in the world of debt, it can be very cheap to just pay the bare minimum and sort of just get by, but that cost will build and grow and compound in the worst way. We want our savings investments to compound, but we don't want our debt to do that, right? So we have to be disciplined, pay it down over time, and certainly be mindful of the ones that higher debt. And that's why getting into the lower cost debt area is advisable, and then ideally getting into spots where you actually can control the terms, like through especially design life insurance policies. That's where most of the debt for myself and some of my clients use, because it has a lot more flexibility to it. So that's all I want to cover today. I mean, there's a lot to consider, and certainly this is where, as you're expanding your sort of financial lives and sort of thinking more broadly around what you're doing with your money, it's important to realize kind of this sort of dichotomy between like the current day and the cost structure and kind of what it looks like in the future. And just like anything else, thinking about the end in mind is so key, because it'll allow you to understand if you're on the right journey of getting to it, right? We know it's not going to be a straight line all the time. We got to weigh the options of what's cheap and what's expensive. Nowadays, I'm willing to invest more in things I used to not, because I didn't, I was thinking very cheaply and very short term. But now I'll invest more in my health, right? Because I recognize that will allow me to stay healthier, be more active, and live longer, and allow me to produce more in this world. So investing that now, even though it feels expensive, can pay off way down the line, you know, as I get to be able to see my grandkids grow and great grandkids grow, right? That to me is a massively rewarding amount outside of even a dollar figure, right? But those are things that we have to think through, because the things we do now over time will obviously impact us down the road. So hope this was helpful, and we'll see you on the next episode of the Perennial Pride podcast.
Thanks for joining me on this episode today. I really am grateful for you as listeners to the Perennial Pride podcast. I hope you're getting some tremendous value out of it and hopefully pushing you along your journey to financial freedom. I put this podcast together really to help you get more educated around your finances so that you feel empowered to live the life that you really want. And if you like the content that you heard today or watched, then I would encourage you to go to my website, perennialpride.com. There's tons of other content there. And you can access my book, Wealth Beyond the Numbers. You can buy it there on my website. It's a aggregation of a lot of great tips and tools I've learned to not only build my wealth in my accounts, but build wealth in my life and abundance and joy, and something that has a lot of my experiences in the journey that I've been on personally. Hopefully that can be also of value to you as you sort of move forward. So thanks again for being a Perennial Pride listener, and we'll see you on the next episode.